How's it going, YouTube? Stocks by the numbers. Welcome back. Wanted to do a quick update video on a company that I know a lot of you were watching, keeping an eye on, took a position in, rolled the dice with. Name of the company, first one we're looking at today, Desktop Metal, ticker symbol DM, listed here on the New York Stock Exchange. Company closed, as we see here, had a little bit of a rally up here, $1.90, up 15 cents, about 8.5% on the day going into earnings. As we see now post-market, down $1.73, 17 cents, about 9% pullback. So the stock was initially pulling back and was down, as we see here, hit a low at the top, $1.62. So it went from $1.62 to $1.90 going into earnings, and actually hit a high of $1.94, stopped right there at that fib, and then of course they came out and they missed earnings. So if the company did come out with like a crazy surprise beat, this is why I kind of pointed out like this little wedge here, because technically when we hit probably right around this earnings report coming out saying about the first week of August, that if that comes in with a good beat and a good surprise, that'll give it the catalyst to break out of this long-term descending wedge and obviously spike back up to some crazy little number here. We did have a gap down going back here, so the stock was, let's see this here, was a low of 337. Right? And then you had a couple of retests here. But that's really the only action it's seen since this gap down. You know, this was what? August, September of last year. So it's been quite a while since it got back up to that level. And reason being is because they're kind of struggling right now. Right? They're bleeding right now in their balance sheet. Losses are outweighing the gains. And revenue just seems pretty sporadic also. They do have these up and down quarters. You know, you see a quarter like this, excuse me, where they come in, 57 million. They come in several million above estimates. That's phenomenal. And then you have a quarter like this where they come in 47 million, estimates of 60. So it's like, all right, you didn't really, continuously grow that revenue quarter over quarter, but then you come in with a good beat here on this quarter. And then we switch back over here to this quarter where estimates drop down from what? From 54 million dropped down to 48.6 million, and I understand it fluctuates sometimes. However, you come in with a big miss like this, missing by 15% on the revenue side, almost 7% on the profitability side. But honestly, we know the company's bleeding, right? So that's why this loss on the EPS isn't really the biggest red flag for me. For me, it's this revenue number here. That seems like a pretty big miss for a small company. Now, again, I'm not bashing them, but I did point out this long-term pattern that was really setting up here, and this is going to be a big quarter here. You can see estimates up here north of 57.75 million. If they come in and they beat these estimates here, again, that will definitely justify popping them back up to like the high twos, potentially the low threes. But here, I don't want to say it's going to get like this bad. Right? See now this bottom trend line, if it just starts selling off now, like the next week or two, and they bring it all the way down to this bottom trend line, as you see, you're looking at like the low $1. I don't know. That does seem a little extreme. That does seem a little extreme. But if you ask me, like here at 173, like can it pull back down to like this low it was here, which is 144? Like, yeah, that's possible. That's definitely justified in my opinion. And also, remember, if they do sell it off now in the next couple of days and they bring it down to $1.44, that may potentially set up your double bottom. So if it closes around like that 140, that low 140 level, you may see a nice little pop the next day. So, try to keep that on your watch list for any short-term traders out here. But, yeah, recently the stock broke this 20-day simple moving average. It came down back into this wedge range. And like I said, it was looking good, but these numbers just came out kind of light. And they give some decent outlook here. This is a Business Wire article came out. I can link it in the description if you guys like, and you can see. Well, it says here they talk about the cost reduction plan, delivering significant year-over-year improvements to the adjusted EBITDA and operating cash flow in first quarter 2023. Combined $100 million in annualized savings from cost reduction plan remain on track in order to reduce expense structure, expand margins, and drive to profitability. So that's why they're saying some good things, and we had a rough quarter. However, now we have to see. That's why I really feel this August quarter is going to be a breakout here, right? Because listen to this. They reaffirmed their full year 2023 guidance of revenue between 210 to 260 million. That is a massive range, in my opinion. However, it does give them some wiggle room depending on what they report. And adjusted EBITDA between 50 to 25 million loss. So usually when you see numbers like this, unless the whole line is in these parentheses, when they show you these numbers, this indicates a loss, by the way. So this is, right, positive 210 to 260 million of revenue that they're going to bring in, and adjusted EBITDA expected between a loss of 50 to a loss of 25 million, with expectation to achieve adjusted EBITDA break even before year-end 2023. Right? Think about that. So now we have these earnings in August, right? 57 million. Now, if we extrapolate that, let's just say they do 57 million for the next 3 quarters for the remainder of the year. So now you're looking at, 170 million, roughly, give or take, in revenue for this quarter, the next quarter, and the first quarter of next year, which is reporting the last 3 months of this year. Okay? So, this was period ending March of 23, right? So this was the first quarter here of 23 being reported now in May. I know and sometimes, it might seem like a simple piece of information that I'm reviewing here, but sometimes people get a little confused with the earnings and they think, these earnings reported today were for the days that ended up till today. And it's not, it's always the previous quarter. But long story short, right? So even if we extend this out, and let's just say it takes them a little bit more time, right? If we bring this out, so this is August 8th, which would be, boom, look at that, 11/8, which is now here at this apex circle. Boom, right? So that's why, in my opinion, it may pull back and sell off and be pretty volatile here in the short term, but I do feel like they're setting themselves up for, you got to click on it again. I feel like they are setting themselves up for some sort of long-term pop here. And even this quarter wouldn't really necessarily be long-term. I know it's, long for short-term traders, but technically it's only a handful of months. But, long story short, in the longer term, I think they're setting themselves up for more success. If, again, they have these annualized savings that they were talking about, and supposedly adjusted EBITDA break even before year end of 23. So that's why I'm saying, even this quarter, maybe they'll meet, and Wall Street will be a little disappointed, and they'll keep it flat. But then going into this quarter here, based on what I just read, it should technically be a healthy quarter, and that will definitely add to the explosion and the pop out of the wedge if this did not happen in August, right? So you have 2 opportunities here for this company to really break out as long as they do what they say and say what they do. And again, I know the revenue does come in sporadic. However, when they do well, they're in the high 50s and the 60s. So this estimate here, 57.7, and then this next estimate probably isn't going to be too much higher than those numbers, the previous numbers. So, long term, I do like it. Long term, I do like it, especially with the pattern setting up and everything I just read. I do prefer it in the long term as opposed to here in the short term, because we know they just missed earnings. So now, they're going to beat the crap out of it and bring it back down to 140, 130 probably. So, that's why I know a lot of you guys like it. And listen, hey, if you're involved at a few dollars higher and now, it's pulling back even more and you're even more upset, just remember, a lot of these companies need time, several years sometimes, to really begin to roll on all cylinders and then start climbing hand over fist, and if it regains something like an 8 and you have it down at 380, it's going to suck that it might take a while to get back there, but hey, you're going to turn around one day, you're going to be up, 100%, 150%, God willing, everything works out. But, yeah, right now they're keeping it down. We spoke about the multiple rejections coming off this 50-day moving average. We're looking at the weekly here, real quick on stock charts, and that's what I mean. They've been keeping it down because the numbers aren't consistent yet, and of course the company is still bleeding. But I'm telling you, if they get everything in line like they're saying, it's going to regain above moving averages and make new supports and resistances, and then climb back up, refill gaps and whatnot, get back to old support and resistance levels. We're at the daily here. RSI, it was climbing, obviously. Stock's been up the last 2 days, but RSI is still sitting here at 43.3. That's why it had a lot more room to run up here into the low twos, but again, numbers came in light. MACD was ready to curl and start rising to potentially cross to give it just another piece of fuel to throw in the fire there, but that's what I mean. Unfortunately, it didn't happen, so it will most likely reverse and continue to slide. But some good things and some bad things. But I just wanted to review again why we initially spoke about Desktop Metal, and more importantly, I clicked on that article and I saw a couple of things that they mentioned, so I just wanted to review what they are projecting for the next couple of quarters and how it could potentially really work out in our favor with not only the technicals but the fundamentals now kind of just setting up and intersecting here altogether. So I'll end it there. But once again, Stocks by the Numbers, thanks for stopping by. Like the video, thumbs up, algorithm, subscribe to the channel, means a lot. Love you guys. If you have any questions, comments, or concerns, down in the comments section. I'm usually very quick to reply. And of course, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. I'll see you in the next vid.